After a wave of pharmaceutical giant exits in Nigeria in recent times, can local players step up to ensure drug security and drive innovation, or will the same challenges keep holding the sector back? Good morning and welcome to another power-packed episode of Business Week. This week, Botswana and De Beers have sealed a 10-year diamond deal, solidifying Africa's role in the luxury market, while China takes Trump's new 10% tariff to the WTO, escalating trade tensions. Meanwhile, the UAE is throwing in 50 billion euros in France in data centers and AI infrastructure. And back home here in Nigeria, the IMF reports a 4.4% dip in Nigeria's GDP per capita, even as a rebound is expected in 2026. At the same time, the EU's historic AI law takes effect, bringing sweeping new regulations in the tech world. And in today's deep dive, we turn our focus to Nigeria's pharmaceutical sector, where big pharma exits in the past 2 years have sent drug prices soaring through the roof and raised fears about medicine shortages. I'm Roake Akintobe-Filani, and this is your front row seat to the biggest business stories you missed during the week. Stay tuned. Yes, as always, we'll start a look with my favorite global energy commodities. Brent crude took a hit week on week. It was down by 2.72% from the previous week, as was WTI, which is down $270.99, down by 2.19% during the week. Two main factors here. We've seen a build-up in U.S. crude oil inventories and gasoline inventories, causing a bit of a supply glut in the North American market. And of course, fears over tariffs and China. Typically, tariffs should raise anxiety in global markets, but most markets and traders are reading this as a potential hit on crude oil demand. Well, we'll see where all that takes us due to the WTO challenge that China has presented. Natural gas was up by 10.53%, as was RBOB gasoline, interestingly, up by 3.98%. Let's take a look at equities markets, starting, of course, with our own stock exchange here in Nigeria. The all-share index closed the week on a positive, and it was a week-on-week gain, actually, to end at 1.38% compared to the index last week. This week closed at 105,933.03 points, over 12,000 deals consummated, volume of shares traded, almost 500 million shares, and a value of 13.37. And of course, market cap keeps creeping up gradually, 65.59 trillion naira. Let's take a look at Africa. We'll move again, a positive green sweep across the board. Joburg was up by 1.77%. We had the Accra Exchange up by a marginal 0.3%. Nairobi was up by 1.01%. Of course, the central bank in Kenya cutting rates by 50 basis points to 10.75%. Positive sentiment there in the market from that rate cut. And finally, Morocco was up again marginally by 0.48%. Let's scoot over now to European markets. Euro Stoxx 600 was up week on week as well by 0.43%. Relatively positive sentiment. Most European markets expecting the European Central Bank to stick to its monetary easing cycle, having a positive effect on markets. In the FTSE All-Share Index 100 in London, that was again up almost flat, actually, only up by 1.15%, and DAX in Germany was up by 0.45%, and of course, French CAC 40 was up by 0.06%. Now, for my top picks from around the world, good news here for Botswana. Botswana and De Beers have sealed a new 10-year diamond sales deal. Now, the joint venture between Botswana and De Beers, known as Debswana, is a 50-50% joint venture between De Beers and the government of Botswana. And the government has decided to extend the mining license to 2054. That's a 25-year extension. This is great news for the new government of Botswana, because diamond mining revenues, diamond mining actually contributes about 30% to the country's GDP, and the country has been seeking ways in the past 2 decades to retain more local value from diamond exploitation in the country. Obviously, one of the world's most prominent processing centers for diamonds is located in Botswana. It's a huge boost for the economy here as well, and a great signal to investors, a 25-year mining lease. That doesn't really happen so much these days on the African continent. So congrats to Botswana. And we also hear that the government may be looking to increase its stake in the joint venture, which is currently at 15%. Negotiations are also going on the back of this mining license extension. We love to hear those sorts of stories from sub-Saharan Africa. Now, China has filed, as many anticipated, a complaint with the WTO on the position of the Trump 10% tariff on Chinese goods. Interestingly, at the start of the year, we expected that percentage to be much higher than 10%. But these two nations, superpowers, the world's two biggest economies, have been at this since 2018. So they've been fighting tariff wars for the past 7 years, essentially, and China says this is discriminatory. Well, according to the rules-based framework of the WTO, both parties have around 60 days to consult on the issue. But as we know, any decision taken by the WTO is essentially just that, a decision. Nations have to essentially find ways to voluntarily comply with global trade rules. We'll see how this pans out. China, of course, threatening its own retaliation on agricultural goods and other goods coming from the US market. So we'll be watching, and we have been watching this issue very closely, but because it affects not just China and the US, but the rest of the world. The UAE is planning to invest 50 billion, somewhere between 30 to 50 billion euros in the French technology market. The French President Emmanuel Macron and Sheikh bin Nahal of the UAE did meet to discuss this. France is looking to really position itself as an AI tech hub within the EU, and is actually wanting to invest in data centers, but also invest in new technologies around artificial intelligence here. And of course, that could have some great contribution on France's GDP insofar as technology contributions is concerned. Of course, the European Union has been trailing the US in terms of the global tech landscape. So this is good news, but more interestingly, actually, is the UAE has been making foray into different parts of the world, not least sub-Saharan Africa, and investing in technology infrastructure. It's done so in East Africa, it is in Southern Africa. So there's also a broader geopolitical move here by the UAE to create new partnerships and leverage for itself in different countries through direct investment. We will be watching this development very closely. The global big four tech companies plan $300 billion in AI spend in 2025. Who are the global big tech companies? It's Amazon, it's Alphabet, it's, I think, Meta. Yes, and there's one more. It evades me, but I'm sure you know who the fourth person is. And essentially, Microsoft, for instance, will be looking to beef up its cloud services, its Azure, its enterprise system that it offers. Amazon is going to be looking to pump more money into Amazon Web Services to extend its reach and penetration. And we understand that Alphabet will be doing much more in the autonomous driving space with apps like Waymo and whatnot. So let's watch how that impacts the stock markets for the big tech companies. AI is really going to be the name of the game insofar as global technology is concerned in 2025. And finally, the IMF has said that Nigeria's GDP per capita has shrunk to about $834 per head. Now, about 11 years ago in 2014, when I moved back to this country, Nigeria's GDP per head was $3,220. Right? So that is a significant drop from where we were about a decade ago. But it's not all bad news, because the IMF says the GDP growth has not outpaced the growth of our population. Of course, GDP is a factor of the population growth against the total output of a country. And nevertheless, we expect to see some recovery in 2026 and 27. The IMF is predicting a return to about $1,000 in 2027. And by 2028, we should be well over $1,000. But certainly, we're going to need much more than that to move forward. Seychelles in Africa, in the Indian Ocean, has the largest GDP per capita. In Africa, it's about $21,000, followed by countries like Mauritius, Gabon, and whatnot. And I think South Africa is actually number 10. So we have a long way to go. And the IMF says, well, All of this will depend on the sustainability of economic reforms in the country, and let's hope the right people are listening. That's it for my top picks for this week. And now for some other top stories from around the world. We'll start with tariffs. In the US, Americans are struggling in a competitive housing market, according to research, which could see President Trump's tariff proposals increase the cost of building new homes in the US. According to the Bellman, a home building research company in Wisconsin, Trump's proposed 25% tariffs on goods from Canada and Mexico, which have been postponed until at least March, combined with 10% tax currently imposed on Chinese imports, may increase the cost of building a typical home by an average of up to $29,000. According to Bellman, whose suppliers get 80% of their lumber from Canada, the tax on the country would account for a significant amount of that rise, up to $14,000. Now, the EU's historic artificial intelligence law went into effect during the week, opening the door for rigorous regulations and the possibility of steep fines for infractions. The EU AI Act is a first-of-its-kind legislative framework for the technology. Sunday, just gone, marked the formal expiration of the deadlines for imposing restrictions on specific AI systems and requiring employees to be sufficiently tech-savvy. Companies are now required to abide by the limitations, and failure to do so may result in penalties. According to the AI Act, some AI applications that pose an unacceptable risk to citizens are prohibited. The World Gold Council reported on Wednesday that central banks accelerated purchases of gold in the fourth quarter of 2024, contributing to a 1% increase in global gold demand, including over-the-counter trading, which went to a record high of 4,974.5 metric tons in the past year, as investment in the sector also climbed. Due to the U.S. Federal Reserve's interest rate cuts and investors' preference for the metal as a hedge against global risks, spot gold prices increased by 27% last year, the most since 2010. Following China's retaliatory tariffs on the U.S. in response to Donald Trump's trade levies years ago, prices also surged to yet another all-time high on Tuesday due to demand for safe haven assets. Google has updated its guiding principles on artificial intelligence to remove prior pledges to never use AI in weapons or in mass surveillance. The policy, announced on Tuesday, marks a shift in how the technology giant approaches AI ethics and national security. This comes weeks after Google's chief executive officer, Sundar Pichai, attended the inauguration of US President Donald Trump in what was considered a pivotal moment in AI governance and corporate responsibility. The World Bank has warned that South Africa will find it difficult to reach the rate of expansion required to lower unemployment and poverty, but it did increase the country's economic growth estimate due to a sustained rebound in the country's energy and logistics sectors. The Washington-based lender's South Africa Economic Update report, released on Tuesday, increased its 2025 GDP growth forecast from 1.3% to 1.8%. By 2027, the bank anticipates that growth will have accelerated to 2%. Now in Nigeria, in a bid to stimulate investment and build vital infrastructure in Nigeria's creative and tourist sectors, the Federal Executive Council has authorized the creation of the Creative and Tourist Infrastructure Corporation. Following the FEC meeting on Monday, Nigeria's Minister for Art, Culture, Tourism and Creative Economy, Hannatu Musawa, announced the decision, calling the plan a game changer that will open up economic prospects and establish Nigeria as a globally recognized destination for culture and tourism. Industry analysts predict that the residential real estate market in Nigeria will reach 2.08 trillion by 2025, based on the current spike in demand for upscale flats in Nigeria's metropolitan centers. The real estate industry will continue to grow in 2025, according to the former president of the Nigerian Institute of Estate Surveyors and Valuers. He also mentioned that's Mr. Emeka, mentioned that values for both sale and rental have been rising at a startling rate. Mr. Emeka Ele supported his argument by pointing out that private sector players have been making significant investments in the industry, particularly through joint ventures for real estate development, which has helped push the industry up to third place on the GDP chart, behind agriculture and trade. Well, still on Nigeria's real estate, the market is expected to reach a value of $3.41 trillion by 2029. That's from other sources overseas, demonstrating exponential growth in the sector. At a press conference, the board chairman of Creative Sphere Limited presented plans to draw in foreign capital and close Nigeria's $300 billion infrastructure deficit in housing. To fully realize the sector's potential, he underlines the necessity of cooperation between developers and foreign funders. He, however, bemoaned that the 28 million housing shortage is more than a statistic. It represents families without shelter, dreams deferred, and a ticking time bomb, while emphasizing the necessity of addressing the numerous issues confronting the industry. Leaders of the Nigeria Labour Congress have suspended the proposed protest against the 50% increase in telco tariffs slated for Tuesday. However, the NLC took the decision following a meeting with a delegation of the federal government under the chairmanship of the Secretary to the federal government.